Now I want to start with multiple choice questions from a chapter of share capital transactions. All these questions are taken from section A. Observe the multiple choice questions. Currently, there is no provision in the Companies Act for incorporation of fill in the gap companies. Options are private company, public company, unlimited company, limited by their shares. Unlimited company is the correct answer. Next. How many maximum number of members in a private company? 50. How many minimum number of members in a public company? 7. Next. In which type of company every shareholder is liable for all the liabilities of the company till the creditors of the company are paid off? This statement signifies unlimited liability. So what's the correct answer? Unlimited company. In which type of preference shares unpaid dividend gets accumulated? Cumulative preference shares. Which type of preference shares are not redeemable before the liquidation of company? Not redeemable means irredeemable. Next. Which type of preference shares can be converted into equity share? Convertible preference shares. Next. If preference shares have a right to participate in surplus profit remaining after distribution of specified dividend to the equity shareholders, what type of preference shares? Participating. How many maximum joint names can be made on share application? The real way. How many maximum joint names with which share application can be made? That's the correct question. 3. So share application can be made jointly in 3 names. How many maximum installment can be called as calls by the company for share amount? After application and allotment, the maximum calls that company can go for are 3. According to the provisions of Companies Act, how much minimum amount should be received on share application of the amount called up through public subscription? Now see, these are the options given to you, but this question is framed from this statement. According to the provisions of Companies Act, company must get share application for 90% of the number of shares intended to issue. So 90% of the amount called up through the public subscription. So suppose that 10,000 shares are offered in public issue. So company wants to issue how many shares? 10,000 shares. What is the minimum number of applications that must be received? 90% of 10,000. That is the minimum requirement for applications to be received. So correct answer is 90%. According to the present provisions of the Companies Act, how much minimum amount of face value of shares should be called up with share application? These are the options. Read this statement. According to the present provisions of the Companies Act, minimum amount to be called along with share application should be 5% of face value. So option A is the correct answer. When call money amount is in arrears, how much rate of interest can company charge on such outstanding amount in terms of the provisions of the Companies Act when company has adopted Table A? So Table A prescribes the percentage of interest to be charged on calls in arrears. These are the options. 5% is the correct answer as per Table A. 5% interest could be charged on calls in arrears. At what rate of interest is paid on calls in advance as per the provisions of Table A of the company? So calls are received in advance. Amount has been received from a shareholder against share capital which has yet not been called. That is known as calls in advance, on which as per Table A, the interest that is allowed is at the rate of 6%. So on calls in advance, interest rate is 6% as per Table A, and on calls in arrears, it is 5%. How much minimum period can be required for shares issued at a discount after the permission to commence a business is received by the company? Yes, what's the answer? 12 months. So after commencement certificate is obtained by the company, company can issue shares after 12 months therefrom. What is the maximum rate of discount for shares to be issued? 10%. This is the maximum rate of discount permitted. Within how much time shares can be issued at discount? After sanction by the central government. 2 months. Which amount is debited to share capital account at the time of entry for forfeiture of shares? The share capital account is debited with what? Called up capital. A is the correct answer. The amount paid by shareholders on share is transferred to which account on forfeiture of shares? The amount paid by shareholder is transferred to which account? Now the here answer is share forfeiture account. But the correct question is amount paid, not amount paid. The capital paid by a shareholder on shares forfeited, that is transferred to share forfeiture account being not refundable. The balance of forfeited shares account after reissue of all forfeited shares is transferred to which account? Capital reserve. At what amount of discount can be given on reissue of forfeited shares? So options are, what could be the reissue discount? The reissue discount can never exceed the share forfeiture income that has occurred on forfeiture of shares, equal to paid up amount. At the time of purchase of business, when company issues shares at a value higher than net assets of the business, the amount of difference is transferred to which account? Goodwill account. The excess of purchase price paid over the net asset is known as goodwill. What is the share premium? What is the share premium for a company? Capital profit. Which company is prohibited from an invitation to the public to subscribe for the shares of the company? Private company cannot invite public to subscribe for the shares of the company? Private company is the correct answer. Who vote to elect management of the company? Shareholders. Equity shareholders. At what maximum rate company can issue shares with premium? There is no restriction for equity share premium that could be collected by the company. Any rate. Next. Which account is debited for differential amount at the time of reissue of forfeited shares with more discount than the share which is originally issued at discount? Shares are originally at discount. Shares are originally issued at discount. Over and above that normal discount, the reissue discount is granted at the time of reissue of forfeited shares. Now, that discount, that is reissue discount, that discount has to be paid out of share forfeiture income. So, share forfeiture account gets debited with reissue discount. Now, I have tried to explain all these questions to you, multiple choice questions. I feel that you have followed it. Thanks to all of you.